Yes. Is voice audible? Perfect. In this marathon lecture, I'll start Limited Liability Partnership Act 2008 topic. So let's begin our marathon of LLP Act 2008, which is having a weightage of 14 marks. So if you go with previous examination question papers from Limited Liability Partnership Act, you observe 16 marks, 12 marks, 14 marks, 12 marks coming from this chapter. So that means you can expect two descriptive questions, each carry 4 marks, and some 3 multiple choice questions, each carry 2 marks. So 2 to 3 multiple choice questions you can expect. So the weightage would be 12 to 14 marks. Simple chapter. I found a little bit difficulty in finding out the exceptional points and designing a question on that exceptional points. Getting my point? So you can see the same document was already updated in my Google Drive. You can download from the description of this video. So only 9 questions I designed from LLP topic. From LLP topic, I just prepared only 9 questions. So let's quickly start the marathon and then exceptional questions too. So Limited Liability Partnership Act, remember, so we had 4 schedules. Schedule 1 is to decide rights and duties of the partners and LLP if there is no formal agreement. So if LLP agreement is silent on any matter, if LLP agreement is silent, then refer that matter to first schedule. Second schedule is for conversion of firm to LLP. Third schedule is for conversion of private company to LLP. Fourth schedule is for conversion of unlisted public company into LLP. So in Companies Act we had 7 schedules. In LLP we had only 4 schedules. Concept of LLP. The main concept of LLP, it is a combination of Indian Partnership Act and Indian Partnership and Companies Act. Indian Partnership and Companies Act. Let me give you a brief introduction about the LLP. Just a small introduction. If you take company, the biggest advantage in company is limited liability of the members. Limited liability of the members. And separate legal entity. That means company is liable for its own acts. Members are not liable for the acts of the company. And if you take partnership firm, the biggest advantages in the partnership firm is flexibility in the management. Flexibility in the management. For change of objects of the partnership, informal meeting of partners is enough. So, formal meetings of the partners, maintenance of the books of accounts, audit of books of accounts, filing of accounts with the ROC, all these compliance task is not there with partnership. So very less compliance, low compliance or less compliance in case of partnership. So partnership is having advantages of flexibility in management and less compliance, whereas company is having advantage of limited liability of the members and separate legal entity. And if you observe carefully, these two are disadvantages in the partnership firm. Again, these two are disadvantages in the company. Getting my point? Everyone. So company disadvantages, nothing but advantages of the partnership. Partnership disadvantages, nothing but advantages of the company. Now coming to the small association, suppose two persons intended to start a business with an objective of profit. So for them, they want limited liability, but looking at company, heavy compliance. You see, every company is required to maintain registers, every company is required to maintain general meetings, every company is required to maintain books of accounts and filing of financial statements and annual returns with the ROC, or else punishments. And the punishments also you can see, the minimum fine, if you see, 100 per day during such default continues in case of non-filing of financial statements and annual returns by the company. So looking at this compliance, they are not interested in company type of organization. Looking at partnership, the disadvantages, that is unlimited liability, joint and several liability. Looking at these disadvantages, they are not interested to start partnership business also. So now these people, instead of doing business, they will join employment. Getting my point? But if they start business, government gets GST, government gets income tax, and some employment opportunities will also be created. Employment opportunities can also be created. So considering all these constraints of company and partnership, government decided to bring a hybrid concept, that is combining the advantages of both company and partnership, and hence LLP came into the picture. So LLP will have a separate legal entity character with flexibility in the management. Partners will have limited liability concept with less compliance. And remember, not all partners liability is limited. Not all partners liability is limited. The partner who is responsible for fraud, the partner who is responsible for non-compliance of LLP Act 2008, these two partners liability will be unlimited. These two partners liability will be unlimited. Getting my point? And one thing, you take company, you take partnership. Those who take participation in the management, those who had a management participation rights, you can see in company we call them as directors, and no management rights, sir. No management rights, just ownership rights, sir. So we call them as members. And similarly, you take partnership, those who participate in day-to-day activities, we call them as active partners. And they're just two owners, sir. They won't participate in management, sir. We call them as sleeping partners. And if you take LLP concept, those who participate in management, we call them as designated partners. And just ownership only, sir. They're having only ownership. Now they will be normal partners. Now you see, concept is same, but designation is different. Concept is same, designation is different. What is the difference in designation? In company we call management persons as directors. In partnership, active partners. In LLP, designated partners. Role is same, just name is different. And ownership rights, members, all the partners. So those who participate in management, in company we call them directors, in partnership we call them active partners, in LLP we call them as designated partners. And designated partners is responsible for compliance with LLP Act 2008, all the filings that were mentioned in LLP Act 2008. Let's see the concept of LLP. It's a legal business entity with limited liability, offering an alternate corporate structure with low compliance cost. It allows partners to structure their internal operations like a traditional partnership. Next one, it is a separate legal entity. It is LLP itself is liable for its debts to the full extent of its assets, while the partner's liability is limited, that too to the extent of agreed contribution. If you ask me personally, sir, partner's nature of liability in case of LLP, it is similar to members' liability in case of company, limited by guarantee without share capital. How members' liability can be calculated or estimated in case of company, limited by guarantee without share capital? Partner's liability is also similar in case of LLP, limited to the extent of agreed contribution. LLP combines features of both a company and partnership. From company point of view, limited liability and separate legal entity. Partnership point of view, flexibility in the management. Since LLP includes elements of both corporate structure and partnership structure, it is known as hybrid between a company and partnership. Coming to the definitions, three definitions are very important. Body corporate definition is important. Here body corporate means company and includes LLP registered in India, LLP incorporated outside India, company incorporated outside India. But body corporate excludes 3 points: corporation sole, cooperative society, any other body corporate excluded by CG notification. So if you see body corporate definition as per Companies Act, body corporate excludes cooperative society. But LLP Act, body corporate excludes corporation sole, cooperative society, and any other body corporate excluded by the notification. So remember this definition of body corporate. Next important definition is financial year. Financial year means period from 1st day of April to 31st day of the March. But if LLP is incorporated after 30th September, the financial year may end on 31st March of the next following year. So that means first financial year, the maximum duration would be 18 months. Remember this cutoff date after 30th September. That means, on or after 1st October. If LLP incorporation date is 1st October, then financial year closure date will be 31st March of not next year, 31st March of next following financial year. So simply 1st October 2026 if LLP was incorporated, then 31st March of 2028 would be the first financial year closure date. And if you remember financial year definition as per Companies Act, the cutoff date is on or after 1st January. There the maximum duration would be 15 months. Here the maximum duration will be 18 months. Getting it? Don't get confused. In Companies Act, 1st January is the cutoff date, on or after. But here the cutoff date is after 30th September. Next important definition is small LLP. An LLP meeting any of these conditions. Which conditions? Contribution up to 25 lakhs, turnover up to 40 lakhs. Then we call it as small LLP. Let's see one exceptional question. Arav Consultants LLP was incorporated on 15th October 2022 under Limited Liability Partnership Act 2008. The LLP is engaged in professional consultancy services. The partners are unsure about the first financial year of the LLP. So what is the date of incorporation, ma? 15th October 2022. Then financial year closure date would be 31st March of 2024, for which its first statement of accounts and solvency should be prepared. For the financial year 23-24, LLP reported contribution 22 lakhs, turnover 36 lakhs. Since two conditions, contribution up to 25 lakhs condition and turnover up to 40 lakhs condition satisfied, so this would be small LLP. The LLP proposes to avail certain compliance relaxations available to small LLP. However, one of the partner contends that since LLP's first accounts run for more than 12 months, it will not be treated as small LLP. Further, LLP wants to follow a financial year different from 1st April to 31st March, stating flexibility under the LLP Act. The auditor objects, stating that income tax law mandates uniform financial year. So based on the above facts, the partner seeks advice on determination of financial year and small LLP status. So first financial year date you can see 15th October to 31st March 2024. What is the maximum permissible period for the first accounts of an LLP? It is 18 months. Shall not exceed 18 months. And whether Arav Consultants LLP qualifies as a small LLP for the financial year 23-24? Yes, LLP qualifies as a small LLP since its contribution does not exceed 24 lakhs and turnover does not exceed 40 lakhs. Clear? Next topic. Characteristics of LLP. Remember some 8 points, ma. See, we can't this kind of question won't come in examination, but we can't predict ICAI, because if you see May 2025 attempt, at the end of the marathon of LLP, I told also look into the differences between LLP and partnership firm, LLP and company, I told. Unfortunately, question came. Yes, really, May 2025 attempt, you can see LLP versus limited liability company differences, one 5 marks question it came, I think. So that's what. So characteristics of LLP, this question generally won't come, but if it comes, you have to write some 8 to 10 points. If it is asked for, if it is tested for 10 marks, 5 marks, at least try to write 10 points. If it is asked for 4 marks, try to write 8 points. Okay. So LLP as a body corporate, I'll just read aside headings. LLP as a body corporate, perpetual succession, separate legal entity, mutual agency. Yes, mutual agency. Generally in partnership firm, every partner is an agent to firm. That means all other partners. Every partner is an agent to all other partners. I'm your agent, you are my agent. That is what mutual agency determines. Mutual agency. I'm your agent, you are my agent. But coming to LLP, there is no concept of mutual agency. There will be concept of agency. And that too, each partner is an agent to LLP, not to the other partners. Each partner is an agent to LLP. So for the act of partner, LLP liable or other partners? LLP. That's why there is no concept of joint and several liability in case of LLP. Individual liabilities only. No concept of joint and several liability. Next one, LLP agreement. Artificial legal person. Common seal, not mandatory. limited liability of the partners, management of the business is done by designated partners, number of partners, minimum 2 partners are required, and at least 2 designated partners are required. Don't get confused with this. Sir, 2 plus 2 is equal to 4 or no, 2 plus 2 is equal to 2 only. So 2 normal partners, those 2 normal partners will take the status of designated partners. Getting my point? No, sir. 2 normal partners I'll have, 2 designated partners I'll have differently. Then can I have 4 partners? Yes. In LLP, minimum number of partners is 2 and maximum there is no limit. And business for profit only. See, partnership is for business only. Similarly, LLP is for business objects only. See, there is no concept of Section 8 company in LLP. Section 8 company with charitable objects. But coming to LLP, there will be no charitable objects, only one object, business object, profit motive. Remember this point, ma. So, yes, an exceptional point. This is an exceptional point. Question can be asked. So, like, Ramu, Venu and Ravi decided to start LLP for carrying some charitable activities. They had a doubt regarding incorporation of LLP for the purpose of charitable objects. So they approached you for an advice. Being a chartered accountant, advise them. Simple 4 marks question. Next one. So what you have to write? You have to write this provision. LLP must engage in lawful business with profit motive. They cannot be formed for charitable or non-economic purposes. Non-economic purposes. Investigation. CG has power to investigate LLP affairs. Mergers, amalgamations, compromise of LLP must follow LLP Act. Conversion into LLP. Yes, we had 3 schedules. Schedule 2, Schedule 3, Schedule 4. For conversion of firm into LLP. Private company into LLP. Unlisted public company into LLP. And all the documents to be filed with ROC or electronic forms only. All the forms to be filed with ROC is electronic forms only. So there is no manual filing. All are digital filings only. Online filings. Foreign LLP, that means it is an LLP incorporated outside India but having a place of business in India, having some business activities in India. Next one, advantages of LLP can be tested for 4 to 5 marks. So remember all these 5 points. LLP is organized and operates as a business on the basis of agreement, LLP agreement. It provides flexibility without imposing detailed legal and procedural requirements, easy to form, easy to dissolve. All partners have limited liability privilege. Remember these 5 points. Don't write your own points. Okay, write these 5 points. 4 to 5 marks. It can be tested. Partner of LLP. So who can become partner of LLP? Any individual or body corporate can become a partner in LLP. But coming to the disqualifications, disqualifications for an individual is he should not be unsound mind, he should not be undischarged insolvent, he should not be adjudicated as an insolvent. So for example, my financial position, my assets are less than liabilities. Straight away I won't be called as insolvent. When I'll become insolvent? If I'm unable to repay the debts, then I can file a petition with the court. Sir, please declare me as an insolvent. When my application is still pending for processing, I'll be treated as adjudicated insolvent. Application processed, court declared me as an insolvent, but court, it takes some time for settlement of my debts. Taking all my assets, settlement of the debts, it takes some time. During that period, I'll be called as undischarged insolvent. So whether you're undischarged insolvent or adjudicated to be insolvent, both disqualified only. Unsound mind disqualified. Next one, eligible entities as partners. Individuals, even a foreign nationals can also become partners in LLP, but they can't become partners in partnership firm. Limited liability partnerships, companies including foreign company, foreign LLP, LLP incorporated outside India, and foreign companies. Note, cooperative society, corporation sole cannot become a partner. Even HUF cannot become a partner. HUF cannot become a partner because it is not a body corporate. Last attempt, I think a question came on disqualifications of the partner. So cooperative society, corporation sole, HUF cannot become a partner. Unsound mind, adjudicated to be an insolvent, undischarged insolvent cannot become a partner. And minimum number of partners, this is similar to section 3 of Companies Act 2013. So every LLP shall have at least 2 partners, not only at the time of incorporation but also subsequent to incorporation. If LLP continues business for more than 6 months with only 1 partner, then that sole partner will be personally liable for all obligations incurred by LLP after 6 months. That means after 6 months, separate legal entity status will be revoked. It's nothing but lifting of corporate will. So we are giving you time period of 6 months to increase number of partners from 1 to 2, or else no corporate will after 6 months of reduction of number of partners. And coming to the designated partner, I told you the role of designated partner in LLP is similar to role of active partner in partnership and director in case of company. So how many designated partners LLP should have? Two designated partners. And coming to the designated partners qualification, they must be individuals. Only individual partner can be appointed as designated partner. First of all, he should be a partner. He or she should be a partner. And individual persons become a designated partner. And out of these two designated partners, one designated partner should be resident in India. So what is the residential status in LLP Act, sir? Residential status means his period of stay is of at least 120 days during the current financial year, not preceding financial year. See, right now we are in the financial year 25-26, right? For 25-26, resident designated partner means during this current year, his period of stay should be 120 days. If you are in India, period of stay automatically will be calculated. That means, number of days you stayed in India will be the period of stay. So getting my point? So period of stay during the current financial year should be 120 days. Suppose, sir, in my LLP, all partners are body corporates. Then who will become a designated partner, sir? These body corporates should nominate individuals as their nominees. And these two individuals, simply the nominees of the body corporate, will act as designated partners. In case of contravention, that means what? No designated partner, or no two designated partners, or no one resident designated partner. Getting my point, students? Getting my point? Three points ma. No designated partner, or only one designated partner is there, or two designated partners who are non-residents. There is no resident designated partner. Then LLP 10,000 plus 100 per day during such default continues subject to maximum of 1 lakh is the punishment. Every partner 10,000 plus 100 per day subject to a maximum of 50,000. And how to identify designated partners, sir? Look at the incorporation document. Whose names were specified under designated partner category, or to whom designated partner status was given, they will be the designated partners since incorporation. Or LP incorporation document may state that each of the partners from time to time becomes designated partner. Then every partner shall be designated partner. A partner may become or cease to be a designated partner as per the LLP agreement. So appointment of designated partner, termination of designated partner will be as per LLP agreement. Okay, voice clear? Yes. So next one, filings with ROC. Remember ma, in LLP, filings happens in three cases. One is filing of annual returns within 60 days of closure of financial year. Next one, statement of accounts and solvency. Statement of account and solvency, this is nothing but financial statements to be filed within 30 days from the closure of 6 months of financial year. Within 30 days of 6 months from the closure of financial year. I'll discuss with you, just wait. And third one is event based filings. Event based filings, for example, changes in the details of the partner, changes in the designated partner, changes in the partners. Event based filings, changes in registered office, changes in the agreement of LLP. So all these event based filings, these three filings compulsory. An individual must give prior consent before being appointed as a designated partner. Same for director also. LLP shall file particulars of DP with ROC within 30 days of appointment. In case of delay in filing with ROC, then LLP 5,000 plus 100 per day up to 50,000 rupees penalty. Every designated partner 5,000 plus 100 per day up to 25,000 is the punishment. And the important qualification designated partner must possess is they must have DIPIN. They must have designated partner identification number. And coming to the liabilities of designated partner, they're responsible for LLP compliance. They're liable for penalties imposed on LLP for non-compliance with the provisions. If LLP is not complying with the provisions of LLP Act 2008, along with LLP, designated partner gets liability. But if you remember, in first point, every partner gets liability. Why? Because there is no DP, or there is no one resident designated partner, or there are no two designated partners. That's why I treat all the partners as designated partner, and all partners gets punishment. But remaining sections, you see, only designated partner will get punishment. Non-compliance with ROC filings, non-filings with ROC, designated partner only gets punishment. Next one, changes in designated partner. Yes, within 30 days of changes, communicate the same with ROC. If there is no designated partner or only one designated partner, every partner will be deemed as designated partner. Accordingly, every partner gets punishment. Every partner gets punishment. If you read this punishment, this is equal to this punishment only. Getting my point? 2 points are same. That means 2 violations are same. Next one, procedure for incorporation of LLP. But before that, let's see another question, another exceptional question. Alpha Solutions LLP was incorporated on 1st November 2024. The partners of LLP are Beta Private Limited, which is a body corporate incorporated in India, and Mr. John, an individual partner, an Indian citizen who stayed in India for 95 days during the financial year 24-25. Only 95 days. Condition of 120 days not satisfied. One resident designated partner should be there. But here if you observe, one is a body corporate, other one is a natural person but a non-resident. The incorporation document of LLP specifies that only one designated partner shall be appointed at the time of incorporation. No. Since incorporation, 2 designated partners should be there. Accordingly, Mr. John was shown as the sole designated partner. Subsequently, on 10 January 2025, Ms. Kavita, nominee of Beta Limited, Private Limited, agreed to act as a designated partner. Yes, 2 designated partner conditions satisfied, and gave her consent to LLP. However, LLP failed to file the particulars of her appointment with the ROC within the prescribed time. Further, Ms. Kavita has not been obtained a designated partner identification till date. Without DPIN, you can't be a designated partner. LLP also failed to file its statement of accounts and solvency within the due date for the financial year 24-25. Partners contended that since default was procedural, only LLP should be liable, not the designated partners. No. Non-compliance of LLP Act, not only LLP, but also designated partner gets punishment. So whether Alpha Solutions LLP complies with the requirement of minimum designated partners? No. Must have at least 2 designated partners who must be individuals, including nominees of the body corporate. Whether Mr. John qualifies as a resident in India for the purpose of section 7? No, because his period of stay is just less than 120 days during the financial year. Next one, whether Ms. Kavita can act as designated partner without DPIN? Again, no. To become designated partner identification number is compulsory. Whether LLP was required to file particulars of Ms. Kavita appointment with the registrar? Of course, yes. Who the designated partner? File the particulars of Ms. Kavita. Along with that, file Ms. Kavita's consent and appointment with the registrar within 30 days of such appointment. Who will be liable for penalty for non-filing of statutory returns? LLP and a designated partner. LLP and designated partner are liable to the penalties for non-compliance. So next, question 3 is also about designated partner only. Let's see. Vertex Consulting LLP was incorporated on 1st April 2023 with 3 partners, A, B and XYZ Private Limited. So 2 individuals, 1 private limited company. LLP agreement provided that 2 designated partners would manage statutory compliances. Accordingly, Mr. A and Mr. B were appointed as designated partners at the time of incorporation, with Mr. A being resident in India. So all the conditions are satisfied. 2 designated partners are there who are individuals, and 1 resident designated partner is also there. On 1st January 2025, Mr. B resigned as a designated partner due to personal reasons. The LLP continued its operations but did not appoint any designated partner till 20th February 2025. If you see changes in in case of vacancy in designated partner, within 30 days of vacancy, new designated partner should be appointed. Within 30 days of vacancy. But what happened? Resignation happened on 1st January, appointment not happened till 20th February, 50 days completed, which is more than 30 days. During this period, only one designated partner remained. Further, on 20th February 2025, Ms. C, nominee of XYZ Private Limited, agreed to act as a designated partner and gave her consent. Fine, complaints is there, but after 30 days. However, LLP failed to file her consent with the registrar within 30 days. Wonderful point. After appointment within 30 days, communicate the same with ROC. It failed. LLP failed to do so. LLP also continued with only one designated partner during Jan-Feb 2025 and did not regularize the vacancy immediately. The partners contended that since LLP continued to function and later appointed as a designated partner, no penalty should be levied. Based on the above facts, examine the applicability of Section 7, 9, 10 of LLP Act 2008. Whether Vertex Consulting LLP complied with Section 9 regarding vacancy of designated partner? No, because within 30 days of vacancy, appointment of new designated partner, they failed to comply. What is the effect of having only one designated partner during Jan-Feb 2025? Very simple. All partners becomes designated partners for punishment. For getting punishment, all other partners automatically becomes designated partners. Whether failure to file consent of Miss C attracts penalty? Of course, yes. Failure to file consent with ROC within 30 days of appointment violates Section 7 subsection 4, attracts penalty. So next one is based on incorporation. Let's see. Procedure for incorporation. Of course, you have to file incorporation document. We call it as Philip form for incorporating LLP. Philip form, shortcut Philip form. So file incorporation document with ROC. So at least two persons must subscribe incorporation document for a lawful business or charitable objects. Tell me, business or charitable objects are lawful business activities with profit motive. The document must be filed electronically with ROC of the state where the LLP's registered office will be located. Filing requires a statement in the prescribed form made by an advocate, CS, CA, CMA who is involved in forming the LLP. So this is about declaration of compliance, declaration of compliance by the professional and subscriber to the incorporation document. Next one, contents of the incorporation document, prescribed format, name, proposed business, residential office address, initial partners, designated partners, other prescribed information. Penalty for false declaration, in Companies Act you will see 447, but in LLP punishment is very little only. The punishment is imprisonment up to 2 years and fine between 10,000 and 5 lakhs. Incorporation by registration. Once all requirements are met, registrar will register the incorporation document and issue a certificate of incorporation within 14 days of filing the application. When you file the application, within 14 days, you'll get a certificate of incorporation. And registrar may accept the filed statement as sufficient evidence of compliance. Certificate will be signed by registrar, authenticated with an official seal. Certificate is a conclusive proof of LLP incorporation. So every LLP shall have a registered office for receiving communication and notices. Document will be served via post, registered post, any other prescribed method, that is over email. LLP can change its registered office by filing a notice with the ROC as per prescribed rules. If LLP fails to comply with the above rules, 500 per day penalty, maximum 50,000 penalty for the LLP and its partners. Next one, effect of registration. So simply remember the characteristics of LLP. It can file suit and it can be sued. It can acquire property and incur liabilities. It may have a common seal. It can perform all lawful acts like any other body corporate. Next one, selection of name of LLP. Most important question from this concept, that is LLP name shall not be undesirable as per CG opinion. Sir, undesirable means what? Your name should not be similar to the name of another LLP or any company or the registered trademark. Remember these three words, remember these three words. If your name is identical to or similar to the another LLP, company, registered trademark, then rectification of name provisions will apply. Rectification of name provisions shall apply. Suppose if your name is similar to the name of partnership or sole proprietorship, no problem. You are allowed to you are allowed to use that name without any objections. Getting my point? In one practical question, you can see partnership name, LLP name matching. Partnership firm, representing partnership firm, one partner filed an objection with ROC. Sir, that LLP name is similar to our name. So order LLP to change its name. Now, is it compulsion? Is it any compulsion on the LLP to change its name? No. Why? LLP name should not be identical or should not be similar to another LLP, another company registered trademark. Remember, so person may apply to the registrar for reservation of name for a new LLP, that is proposed LLP, or name change of an existing LLP. If registrar is satisfied that the name does not violate section 15, it will be reserved for 3 months from the date of intimation. Sima, in company, reservation of unique name is for 20 days for existing companies, 20 days for proposed companies, 60 days for existing companies. But coming to the LLP, name reservation is for 3 months. Remember these time limits. Company name reservation is for 20 days only. Existing company planning to change name, the proposed name will be reserved for 60 days. Coming to the LLP, name once reserved, it will be valid for 3 months. Within 3 months, incorporation or change of name, you have to comply. Rectification of name. If an LLP is inadvertently registered with a name that is identical or nearly resemble to another LLP, another company or registered trademark. So you can see here partnership firm, sole proprietorship, not covered, not covered. So even if your name is matching with existing registered partnership or registered sole proprietorship, no problem to you. You can use that name continuously. If your name is matching with another LLP or a company or a registered trademark, then on an application from the affected LLP company trademark, CG may order LLP to change its name within 3 months. A registered trademark owner can apply for rectification within 3 years from LLP's incorporation or name change. Once LLP changes its name, notify the registrar within 15 days. Registrar updates the incorporation certificate. LLP shall update its LLP agreement within 30 days. First you intimate, first you give information to the registrar about the changes of the name. Within 15 days of partners consent, registrar updates the name and issue fresh certificate. Once you get fresh certificate, within 30 days, amend your LLP agreement, file the same LLP amended agreement with the ROC. If LLP does not comply, central government will give a new name. If you don't like that new name, you can voluntarily change your name as per the prescribed rules. Relationship of partners with LLP, simply agency. Every partner is an agent to LLP or other partners. LLP. Every partner is an agent to LLP. So the rights and liabilities of the partners and the LLP governed by LLP agreement. If LLP agreement is silent, then schedule 1, first schedule will apply. So LLP agreement should be filed with the registrar in the prescribed form, manner and fees. Within 30 days. Within 30 days of incorporation, LLP agreement shall be filed with ROC. Remember this point, last attempt MCQ came. Within 30 days of incorporation, LLP agreement shall be filed with ROC. Here also you can see LLP shall update its LLP agreement within 30 days of changes, within 30 days of incorporation. A written agreement made before incorporation between the subscribers can impose obligations on the LLP provided it is ratified by all the partners after incorporation. So pre-incorporation contracts can be ratified by all partners after post-incorporation. In the absence of agreement to the contrary, yes, mutual rights and duties of partners and LLP shall be determined by the first schedule. Next one, changes of the partners in LLP. That means, admission of a partner, retirement of the partner. So simply cessation of partnership interest. So all these things, death of the partner or LLP dissolution, LLP being a partner of one LLP. Now partner LLP got dissolved. Sima, ABC LLP is there. In this, partner A, partner B, both are individual partners. Whereas C, this is C LLP. This is C LLP, which is a body corporate. Now death of the natural persons or dissolution of the LLP, or any person declared to be unsound mind by a court, or any person filed an application for declaring him as an insolvent. So in all these 3 cases, partner automatically gets seized from the partnership, cessation of partnership interest. So former partner, that means outgoing partner, is still regarded as a partner in dealing with third party unless he has given a notice to the public. So simply public notice. Until he give public notice, he will be treated as partner. Accordingly, his liability will continue. Or notice that former partner has ceased to be a partner of LLP has been delivered to ROC. ROC filing. Either give notice to the public or file it with ROC, because if you file a piece of document with ROC, it becomes a public document. So your termination will be effective from the date you file form with ROC. Cessation does not discharge previous obligations. Cessation discharge you from future obligations, whereas there will be no impact on previous obligations. Former partner is entitled to the refund of his capital contribution, whatever he contributed so far, and whatever profits he is entitled to after deducting accumulated losses up to the date of his exit. So final settlement to be done. This is nothing but full and final settlement, F&F, full and final settlement. No management rights. Former partner will lose management rights. I'm telling you, in LLP or in company or in partnership, you take generally two rights will be there. One is management rights, the other one is ownership rights. If you are having only ownership rights, that means you may be a sleeping partner or you may be a member. No sir, along with ownership rights, I'm also having management rights. That means you may be a designated. Yes, yes. You may be a designated partner or you may be an active partner or you may be a director of the company. So getting my point? So you may be an active partner or designated partner or director if you are in having both management and ownership rights. Next one, registration of changes in the partners. Every partner shall inform shall inform the LLP of any change in his name or address within 15 days. So changes in partner's address, changes in partner name, first name, middle name, surname. So if surname is getting changed, generally female partners, post marriage surname will be changed. So change of names, change of address, that partner should communicate with LLP within 15 days of the event, and LLP should communicate the same with ROC within 30 days. Within 30 days, LLP has to communicate the same with ROC. So LLP shall file a notice to the ROC within 30 days of any partner joins or exits. Simply this is nothing but changes in partners. Changes in partners. And if there is a change in name or address of the partner, so simply my name has been changed. This happened in day 0. By day 15, partner should communicate with LLP. By day 30, LLP should communicate with ROC. So LLP should communicate with ROC two cases. One is changes in the details of the partner. Other one is changes in the partner details. Changes in partners. First one. Second one, changes in partner details. Partner details means what? Name, address. Name, address. Next. The notice shall be in prescribed form with the required fees, be signed by a designated partner authenticated as per the rules. For new partners, include a signed consent statement. So admission of a partner, that fellow has to sign, that fellow has to give a written consent before becoming a partner. File that written consent with ROC. LLP and designated partners are liable for non-compliance, 10,000 penalty. Individual partner, this fellow, first point, this fellow failed to communicate his changes, 10,000 penalty for failure. If partner believes LLP will not file their exit notice, they may file it themselves. Registrar shall seek confirmation from LLP. If there is no objection within 15 days, registrar will register the notice. So simply retiring partner, first he will give notice to the LLP. I am retiring from the LLP. LLP has to communicate the same with ROC within 30 days. If LLP fails to communicate with ROC, retiring partner himself will file an application with ROC. Sir, from so and so date onwards, I am no more a partner, sir. Immediately ROC will give intimation to LLP and wait for 15 days. Within 15 days, if LLP is not responding, ROC believes this retirement is valid, and accordingly he will register the notice of resignation. So from the date onwards, retiring partner, that means former partner, is no more responsible for the acts of LLP. The extent and limitation of liability of the partners in LLP, their liability generally limited, every partner is an agent of LLP for its business activities, but not agent of other partners. If a partner acts without authority, LLP is not bound. If partner has no authority, remember he is none other than sleeping partner. Who is this fellow? Sleeping partner. And the third party knew that partner had no authority or was unaware that he was a partner. I'm sorry. Just wait. Yeah. This fellow Second point, this fellow is sleeping partner. Third party is not having a knowledge that this fellow is a partner. That means sleeping partner. Whereas first person, he is not he is a partner without authority. He is a partner but no authority. The partner has no authority to act for LLP. This fellow is also sleeping partner only, in fact. And second one, third party knew that the partner had no authority or was unaware that they were a partner. Sleeping partner is generally not known to the public, right? That's what. Partner with no authority. LLP is liable if partner's wrongful act or omission occurs during business operations or within the LLP's authority. For the act of an agent within the authority, even if he commits fraud, principal is liable. Act beyond the authority of the principal. Agents act beyond the authority of the principal. Principal is not liable. Simply you remember doctrine of ultra vires in the Companies Act, doctrine of indoor management in the Companies Act. Partner doing mistake which is within his powers, like I'm an active partner, I can collect money from the debtors. I collected amount from the debtors and I misappropriated that money. Is LLP responsible to debtor? Yes. Suppose I'm a sleeping partner, I had no authority to collect money, but that fellow debtor gave money to me. Now whether LLP liable or not liable, LLP is not liable for the acts of sleeping partner. Getting my point? So in one case LLP is protected in case of doctrine of ultra vires, doctrine of constructive notice. In one case outsiders are protected, that is nothing but doctrine of indoor management. So extent of liability of the partner. A partner is not personally liable for LLP's obligations just because he is a partner. He is personally liable for their own wrongful acts but not for the acts of other partners. Here there is no mutual agency with other partners. There is only agency. That agency is also between partner and LLP. If partner is doing a mistake which is covered within his powers, then LLP is liable and this solo partner is responsible to the LLP. If partner is doing fraud outside his powers, outside his authority, then that solo partner is responsible to the outsiders. LLP is not responsible. Simply doctrine of constructive notice. Holding out, like estoppel. If a person falsely represents themselves as a partner, they are liable if representation is spoken, written or by conduct. The third party relies on it, extends credit to the LLP. If LLP receives credit due to false representation, then LLP is liable for the amount received. See, actually ABC are partners of ABC LLP. One day X made a statement so that Y believed that X is also partner in ABC LLP. Accordingly, Y gave some finance to ABC LLP. So for this finance loan amount, who is liable? ABC LLP will be liable. It is liable for the amount received. If LLP is not paying amount, definitely Y will recover that amount from X because X is a partner by holding out. Initially, who is liable? LLP is liable. LLP because it's a body corporate. It incurs liability in its own name. It acquires assets in its own name. So LLP is liable for the amount received. If an LLP continues using the deceased partner name, the legal representative of the deceased partner is not liable for the acts of LLP after death. In case of death, insolvency, notice not required. Notice to the public is not required. Unlimited liability in case of fraud. If an LLP or any partner acts to defraud the creditors, then their liability from limited, it becomes unlimited. Limited liability will be gone, unlimited liability comes into the picture. LLP is liable for a fraudulent act of the partner unless it proves act was without LLP's knowledge or authority. If an LLP knowingly carries out fraudulent business, those involved in that business will face imprisonment up to 5 years and fine between 50,000 to 5 lakhs. LLP, every partner, designated partner, employee involved in fraud must compensate the losses suffered by an affected person. This is similar to section 35 of Companies Act. So civil liability, so compensate the persons who incurred loss because of this fraud. However, LLP is not liable if the fraud was without its knowledge. I'm telling you, right? Doctrine of ultra virus. You take doctrine of ultra virus. Company is not liable. The defaulters are liable to the outsiders. Next, very small concept, whistleblowing. Last attempt, I think, whistleblowing concept came for 4 marks. So what is the concept? You know, in whistleblowing, you have to remember the second point. First of all, the whistleblower, the fellow who is providing useful information during investigation, and because of that information, you know, the investigation time has been reduced, or it became easy for the team to inquire the matters of LLP very quickly. Simply time saving is there. Then that fellow's punishment may be reduced or waived off. Suppose, you know, 3 partners in LLP, 2 committed crime, and the third partner voluntarily surrendered to investigation department, revealed entire scam details. Now the third partner penalty would be either reduced or waived off. In that case, remaining 2 partners should not harass the third partner who acted as a whistleblower. So no partner or employee shall face discharge, demotion, suspension, threats, harassment, any other form of discrimination in their employment terms for providing or facilitating the information. So till then we will see, I think 2 or 3 questions are there. 2 questions are there. We'll see these 2 questions. Bright Vision Advisory LLP was incorporated on 1st April 2021 with 3 partners, Mr. R, S and T. LLP agreement is silent on the procedure for resignation of the partners. Now in that case, 30 days before the effective date of resignation, you know, your intention to resign, when before that, 30 days before that, you have to give notice to the LLP. 30 days before that, you have to give notice to the LLP. On 1st January 2025, Mr. R sent a written notice to the other partners stating his intention to resign from the LLP with effect from 31st January 2025. After his resignation, LLP continued to deal with the several clients, some of whom are not informed about Mr. R's cessation. LLP, due to internal oversight, failed to file Form 4 with registrar regarding cessation of R within 30 days. Further, Mr. R had an outstanding capital contribution of 8 lakhs and was entitled to the share of accumulated profits of 2 lakhs. Total how much? 8 plus 2, 10 lakhs. Separately, Miss S changed her residential address on 10th February. So from this date onwards, within 15 days. So by 25th February 2025, communicate the same with LLP. But communication happened on 5th March. Again, this is another default. One is non-filing of changes in the partners. Second one is individual partner forgot to update his details with the LLP. Okay. Individual partner failed to update his details with LLP, first one. And second one, changes in the partners, LLP failed to communicate with ROC. Mr. R apprehended that LLP may not intimate the registrar about his resignation and sought advice on whether he could himself file the notice and what liabilities, if any, would continue after his cessation. So he can communicate with ROC. ROC will wait for 15 days. ROC will give intimation to the LLP and ROC wait for 15 days. Within 15 days, no objection from LLP means registration of the resignation of the partner. Registration of resignation of the partner. Whether Mr. R has validly ceased to be a partner of LLP? Yes, Mr. R has validly ceased to be a partner by giving 30 days written notice as permitted under section 24 subsection 1. In the absence of LLP agreement. Suppose in LLP agreement, 2 months notice is required, like that they mentioned. Now 2 months notice is compulsory, or else as per first schedule, 30 days notice is enough. Whether R continues to be liable to the third party after cessation? Yes, because same has not been communicated with the registrar. Until notice of cessation is given to the public or until it has been filed with registrar, his liability will continue. What are the financial rights of the Mr. R after cessation? He is entitled to receive his contribution amount of 8 lakhs and accumulated profits of 2 lakhs after deducting all the losses. So Mr. R is entitled to the return of his capital contribution and share in accumulated profits. Whether LLP has contravened section 25 and what are the penalties. If LLP has contravened section 25, penalties would be 10,000 rupees. You can see 10,000 rupees for late intimation of address change and 10,000 rupees for failure to file notice of cessation within 30 days. Whether Mr. R can himself file notice of cessation with the ROC? Yes, Mr. R may himself file notice of cessation, but registrar shall register if the LLP fails to confirm within 15 days as per section 25 subsection 6. Minute points only, minute points only. I designed exceptional questions. So these points you all know, but you have to stress these points. You have to be thorough with these points. That's why I designed a question on this minute points also. Next question is about relationship between partners and LLP. We will see this also. Vertex Legal LLP is a limited liability partnership engaged in legal consultancy services. LLP has three partners, A, B, C. As per the LLP agreement, A, B are authorized to enter into the contracts on behalf of LLP. That means two designated partners. Next one, in January 2025, Mr. C without any authority entered into consultancy contract worth 25 lakhs with Mr. X representing himself as having authority to bind the LLP. Mr. X was unaware that C had no authority but still proceeded with the transaction. He was aware that Mr. X was aware that C had no authority. Array, if an outsider knew that this partner is not having authority and still proceeded with the transaction, you tell me LLP liable, individual partner liable? Individual partner liable. He was clearly aware of that C had no authority. So individual partner is personally liable. Separately, Ms. B, while acting in the ordinary course of LLP's business, negligently gave incorrect professional advice to a client, resulting in loss of 10 lakhs to the client. Negligently means fraud. Now that person responsible for fraud is solely liable to the LLP and LLP is liable to the client. Further, Mr. D, who was never a partner, represented himself on the LLP's website and visiting cards as a partner of Vertex Legal LLP, partner by holding out. Relying on this representation, bank extended a loan of 15 lakhs to the LLP, which was utilized by LLP for its business. So now LLP is personally liable for that loan amount of 15 lakhs. In another incident, Mr. A, with an intent to defraud creditors, diverted LLP funds to his personal account. LLP claims that it had no knowledge or authority of such fraudulent act. So A, to defraud creditors, diverted LLP funds. So fraud case, A will get unlimited liability. So based on the above facts, answer the following questions. Whether Vertex Legal LLP is bound by the contract entered into by Mr. C? Answer is no, because he had no authority. Even third party knew such lack of authority also. Whether LLP is liable for the negligent act of Ms. B? Of course, yes, because that fellow committed in the course of business. Ms. B committed this negligence in the course of business. So those who are watching live, in case of any doubts of these points, you can ask me, you can comment in the live chat. I'm seeing your comments also. Let me show you. So green shade is coming, right? Yeah. So I'm seeing your comments also. So if you had any doubt or if you want repetition of any point, you can ask me. Fine. Okay. So observe carefully, ma. For the wrongful act of Miss B, whether LLP is liable because Miss B committed such negligence within the authority. Therefore, LLP is liable. But for the 10 lakhs, Miss B is personally liable to LLP. For wrongful acts, partner is personally liable to the LLP. Whether Mr. C is personally liable for the contract entered into by him? Yes, because he is having an authority. Yes, Mr. C is personally liable for the obligation as LLP is not bound by his unauthorized act. In case of fraud, partner's liability is unlimited, I told you, right? whether Mr. D is liable under the doctrine of holding out and whether LLP is also liable. Yes ma, first LLP is liable. If LLP is not paying the amount, Mr. D is liable under holding out for representing himself as a partner to the extent of 15 lakhs being the credit received by it, not beyond that. Not beyond that. Holding partner by holding out is liable to the extent of 15 lakhs only. What is the extent of liability in case of fraud committed by Mr. A? So Mr. A, what fraud he committed? Yes, he diverted LLP funds. And what Mr. C did? C without authority entered into consultancy agreement. Okay. C without authority entered into an agreement. So this doctrine of constructive notice, doctrine of ultra vires will apply. LLP is protected. Individual partner is personally liable. Okay. Next one. Here doctrine of indoor management. LLP is liable. Here doctrine of again doctrine of ultra vires, doctrine of constructive notice, LLP is not liable, individual partner is solely liable. Last one, liability of Mr. A is unlimited and LLP shall also be liable unless it proves lack of knowledge or authority. Further, Mr. A is liable to the criminal punishment, that is imprisonment and fine. Imprisonment up to 5 years we have seen, right? So for that criminal punishment also Mr. A is liable. So students, I'm looking the live chat also. In case you had any doubts, in case of repetition of any point, just comment below. So once again, I'll read that point. Once again, I'll explain you that point. Next one is regarding maintenance of books of accounts. See, partner's contribution, simply one entry I'll write, you'll understand. Partner's contribution entry would be, we are getting some amount in bank. So bank account debit 10 lakhs. One partner is bringing plant and machinery or land and building, account debit 10 lakhs. One partner is providing services and he is not charging a single rupee also. Simply partner's salaries, account debit 10 lakhs. Two, partner A 10 lakhs, partner B 10 lakhs, partner C 10 lakhs. That means what? Contribution can be either in cash, contribution can be in kind, but it should be expressed in monetary terms. Getting my point? So monetary value of each partner contribution shall be accounted. Suppose C is a management consultant. He is providing services to the LLP at zero charge. That means he is not taking any money and he requested other partners. See, my investment of services, you consider it as LLP capital investment. So my services, the services I'm contributing to the LLP, consider this as capital contribution. And remaining partners also agreed, and this is as per LLP agreement. Now you can see intangibles also will form part of partners contribution. Tangible, movable, immovable, intangibles can also become a part of capital contribution. Next one, maintenance of books of accounts. LLP must maintain proper books of accounts for each year of its existence. Remember, this is most highlighting point, either on cash basis or accrual basis. Companies compulsory accrual basis, but LLP both accrual, cash both allowed. But double entry system, there is no choice. There is no choice of single entry system. Double entry system mandatory. Maintain books of accounts at registered office for the prescribed period, that is 8 years. Last 8 years books of accounts you maintain. And statement of account and solvency must be prepared within 6 months from the end of financial year, and it should be filed with ROC within 30 days after closure of 6 months. Within 30 days after closure of 6 months, file the copy with ROC. So statement of accounts and solvency should be filed with registrar within how many days? Within 30 days after closure of after 6 months from the closure of financial year. That means most probably 30th October it comes 30th October. Audit of accounts, small LLPs are exempted from audit of audit conditions. Small LLPs are exempted from audit. Next one, penalties, you can see, just give one time reading. Annual returns shall be filed within 60 days of the financial year closure. For foreign company, for LLP, foreign company as well as LLP, filing of annual returns within 60 days of closure of financial year. Next one, ma. Penalty for false statements in the returns you filed with ROC, statement of accounts and solvency, annual returns, any form you file with ROC. In case it contains false statement, so imprisonment is up to 2 years and fine 1 lakh to 5 lakhs. ROC may ask additional information upon inquiry, investigation, upon inspection, inquiry, investigation. If ROC wants any additional information, it may ask any person. You may be a partner or designated partner, present or past, So you may be asked additional documents. It's your duty to provide that information. If you fail to provide that information, ROC may issue summons to appear before him or an inspector or any public officer designated by the registrar. Anyone who fails to comply with registrar summons, fine 2,000 to 25,000. Based on this, let's see one exceptional question. Apex Knowledge Solutions LLP was incorporated on 1st July 2022 and is engaged in professional training services. The LLP follows the accrual system of accounting. Its registered office is situated in Bangalore. For the financial year ended 31st March 2024, LLP maintained books of accounts not strictly under double entry system, default 1. Cash basis allowed, but single entry system not allowed. Did not prepare statement of accounts and solvency within the prescribed time of 6 months from the closure of financial year, default 2. Filed the statement of account and solvency with the registrar on 30th January 25. No, it should be filed within 30 days of closure, within 30 days of 6 months from the closure of financial year. Again, this is also default 3. Didn't get its accounts audited. For this we need to check whether it is a small LLP or not. Though its turnover exceeded the exemption limits, now audit mandatory, no audit means another default. Further, LLP filed its annual return for financial year on 15 September, that is after 60 days of closure of financial year, another default. Total 5 points, 5 defaults only. During inspection, it was found that one of the designated partner had knowingly omitted a material liability in the statement of account and solvency. That means false statement in the account statement of account and solvency, default 6. Registrar exercising his power issued a notice calling for explanation from the designated partners. One designated partner failed to appear before registrar despite being summoned. Then the 2,000 to 25,000 penalty will apply. Whether Apex Knowledge Solutions LLP complied with section 34 relating to maintenance of books of accounts? No. Why? They didn't follow double entry system. You can see here, not strictly under double entry system. Whether non-audit of accounts is permissible in this case? Not permissible. Since turnover exceeded the exemption limits, it was mandatory. Audit was mandatory. Whether filing of annual return on 15 September 2024 valid? No. Why? That is after 60 days. What powers does registrar have and what is the penalty for non-compliance with the summons issued by the registrar? 2,000 to 25,000. So this is also one exceptional question, ma. We are left with 3 more questions and minute concepts, small concepts. Let's see. Compounding of offenses. To avoid detailed legal prosecution proceedings, if you know you committed an offense, just go and surrender. Just go and file an application with ROC. ROC will forward that application to RD. Now RD will avoid detailed legal prosecution proceedings and will impose a direct penalty on you, direct fine on you, and you have to pay the fine prescribed by RD. If you are not complying with RD orders, the fine amount would be double of the normal fine. And the benefit of compounding means simply entering into the compromise. Sir, I'm accepting, sir, I did a mistake, I'm accepting. So please avoid all these detailed proceedings so that I can save time, I can invest adequate time on doing business. Okay, so the point is this benefit is allowed once in 3 years. If you commit second offense within 3 years, for the second offense or subsequent offense, you won't get the benefit of compounding. But if you commit the same offense after 3 years, it will be considered as first offense. So once you take a benefit of compounding for one offense, you should not commit that offense within the next 3 years. If you commit within the next 3 years the same offense, For the subsequent offense, you can't claim benefit of compounding. A detailed prosecution proceedings will be initiated. So file application with ROC, who will forward that application to RD. If an offense is compounded, ROC must be informed within 7 days, and all the detailed legal proceedings will be stopped. If already started, then ROC will inform the court to stop all the legal proceedings. Stay order, we call it as stay order. Remember in this compounding of offenses, this benefit once you claim, next 3 years for same offense you can't claim that benefit. After 3 years you can claim it. Next one, application should be filed with ROC, who will forward the same to RD. So who is having power to approve the compounding of offenses? Regional director. And what would be the fine? Minimum fine, maximum fine for that offense. And another important point is which offenses can be compoundable. The offenses where only fine is the punishment. The offenses where only fine is the punishment, not others. Not others. That means where imprisonment is there, compounding of offenses not allowed. Minute cases, civil wrongs, simply civil cases, compounding is allowed. Criminal cases, compounding not allowed. Detailed legal proceedings will be initiated. Next one, fail to comply with RD's order, maximum fine would be twice the amount of the fine prescribed in the respective section. Based on this, one question is there. Omega Advisory LLP was incorporated on 1st April 2020. During financial year 22-23, LLP failed to file its annual returns under section 35 within the prescribed time. The offence was punishable with fine only. On an application made by LLP, offence was compounded by the regional director on 15th September 2023. From here onwards, next 3 years, for same offence, compounding of offences benefit is not given. Subsequently, financial year 24-25, LLP again failed to file its statement of accounts and solvency within the prescribed time. So this offence was committed within 3 years only. So subsequent offence, compounding benefit not allowed. On 10th June 2025, before initiation of prosecution, Omega Advisory LLP applied for compounding of the offences. Registrar forwarded the application with his comments to the RD. RD compounded the offence and directed one of the designated partner to file the pending statement of account and solvency within 15 days. However, designated partner failed to comply with the direction of RD. Now fine would be twice of the maximum fine. Meanwhile, partner argued that since earlier offence was already compounded, present offence cannot be compounded again. But earlier offence, is it the same offence? No ma. Previously it is annual return offence. Now it is offence related to statement of account and solvency. Both are different offences. Different offences, compounding benefit is available. Same offences, you have to check whether 3 years over or not. Within 3 years means no benefit of compounding. So whether second offence committed by Omega is eligible for compounding? Answer is yes. Why? Because it was committed after expiry of 3 years from the date of earlier compounding and hence deemed to be the first offence. Deemed to be the first offence. So you remember ma, here it is not about the 3 years ma. Here it is not about the 3 years. Just make a change of it. I'll make a change of it and I'll update the updated a new one in the Google Drive. Just earlier small mistakes are already rectified. You can go through it. So here it is. Earlier one is annual returns. Now this one is statement of accounts and solvency. Another offence. Who is competent authority to compound offences? Regional director. What is the effect of compounding before institution of prosecution? So the prosecution, no prosecution shall be instituted where compounding is done before institution of the prosecution. What are the consequences of non-compliance with RD's order? Twice of the maximum fine. Doubled. Maximum fine shall be doubled. Okay. Next one. Last one. Whether the present offence will be treated as first offence or subsequent offence. It will be treated as first offence because earlier compounding was done more than 3 years ago. So better, what I'll do is I'll change it as financial year. I'll change it as financial year 2021. Now to this, if you add 3 years, it comes 23-24, whereas financial year 24-25 means it is after 3 years, right? So I'll rectify this year of mistake ma. I'll rectify this year of offense. That would be better. Next, we are left with only two exceptional questions. One is on compromise arrangements. The other one is on winding up of the LLP. Only two topics, two major topics are pending. We'll see. Assignment and transfer of partnership rights. Remember, my dear students, as a partner, you will have management rights, you will have ownership rights. Ownership rights. Now in this section 42, what can be transferred? Only ownership rights can be transferred. That means transferee can claim only share of profits. Transferee cannot participate in management. Cannot participate in management rights. You remember, only ownership rights can be transferred. So partners' right to share in profits and losses, to receive distributions as per LLP agreement is transferable. That means economic benefits, ownership rights can be transferred but not management rights. Therefore, transferee or assignee cannot participate in the management, cannot access LLP transaction information by virtue of the transfer alone. No management rights. You remember this point, that's it. This section is over. Management rights can't be transferred, ownership rights can be transferred. By transferring ownership rights, you are entitled to the share in the profits, you are entitled to receive the distributions as per the LLP agreement, but not beyond that. Conversion of firms into LLP, very simple. If a firm is getting converted into LLP, if a firm wants to convert itself into LLP, file an application with ROC. ROC, after scrutinizing your application, grants you permission. Immediately file a notice with ROF, Registrar of Firms. In case of private company or in case of unlisted public company, you file a document with ROC for conversion. Once ROC gives you permission for conversion, yes, file an intimation to your old ROC, previous ROC, that close my records, myself converted into LLP. Now that ROC will maintain records in LLP, will open LLP records, will close company records. That's it. But remember, effect of registration. From the registration date, LLP will exit with the name stated in the certificate, transfer of assets and liabilities. So that means all assets becomes assets of the LLP. All assets and liabilities of company or partnership firm become assets and liabilities of the LLP. No additional assurance or no additional registration of documents is required. But only point is, partners of firm should become partners of LLP. All the members of company should become partners of the LLP. Then only capital gains issues will not come. Next one, compromise or arrangement. So when there is a dispute between LLP and partners, when there is a dispute between LLP and partners, when there is a dispute between LLP and creditors, or when there is a dispute between liquidator and partners, in case of winding up of the LLP, liquidator is asking partners contribute uncontributed amount, liquidator is asking. So if there is any dispute between the parties, so either of these parties can go to tribunal, can ask for a settlement, internal, for a settlement. That is nothing but compromise. So for compromise, 3/4 in value of the creditors or partners approval is required, then only tribunal will give approval. Very simple, for example, VM LLP took loan of some 1600 crores from 16 banks. 16 banks. So 1600 crores into 3/4. 1600 crores into 3/4 means 1200 crores. Creditors having the credit balances of, creditors who granted 1200 crores loan to the LLP, if they agree, compromise can be approved by the tribunal. Here, first of all, let me tell you, it took loan of 1600 crores from 16 banks, but now it is not in a position to repay the loans. In this case, LLP is asking, see, I'm facing a cash crunch. You give me some 20% debt waiver. You give me some 20% debt waiver. Balance amount I'll pay in 3 years. Equal installments I'll pay balance amount. So this is what the request of VM LLP. And 1200 crores worth the creditors, they are giving approval. Now to this compromise arrangement, if tribunal gives approval, then that compromise provision, that compromise clauses will be implemented, like 20% debt waiver instant, balance amount will be paid in equal installments for next 3 years. The tribunal will not approve the compromise unless LLP or applicant discloses all material facts, including latest financial position of LLP, any ongoing investigation proceedings. So, disclosing these material facts, tribunal may give approval to the compromise. It's a it's a dispute resolution process, ma. LLP must file tribunal's order with the registrar within 30 days. The order takes effect only after filing. So yes, tribunal will give approval and tribunal orders must be filed with ROC. Only from the date of registration with ROC that order will be valid. Non-compliance attracts penalty. 10,000 plus 100 per day up to 1 lakh. Designated partner 10,000 plus 100 per day up to 50,000. Tribunal may impose, tribunal may stay any suit or proceedings against LLP until compromise application is resolved. So in any civil courts, about this non-payment of debts, if any of the banks filed a litigation, if any of the banks filed a petition in any court against this LLP, all these legal proceedings will be stopped temporarily until tribunal approves the compromise agreement. If compromise is not possible, then tribunal may order for winding up of the LLP. So here, tribunal is having power to supervise the compromise or arrangement even after giving approval. It is having continuous powers, and it may also modify the earlier orders if necessary. Next one, if tribunal is satisfied that compromise cannot be worked satisfactorily either on its own motion or on the application of any person interested in the affairs of LLP, make an order for winding up of the LLP, and such an order shall be deemed to be an order made under section 64 of the Act. Next one. So amalgamation. Next one, amalgamation. So if tribunal gives consent to this amalgamation, all the properties and obligations of transferor LLP becomes properties and obligations of transferee LLP. That is the highlighting point. Remember this point. Next one. This point was tested one time so far. This point was tested one time. Tribunal may order the winding up of the LLP if LLP itself decides to be wound up by the tribunal. That means partners agreed and filed an application with tribunal. Sir, please liquidate us. Because if tribunal is ordering for winding up, some independent authority will monitor the winding up process. Number of partners fall below 2 for more than 6 months, or LLP is acting against sovereignty and integrity of India. If LLP fails to file the statement of accounts and solvency or annual return with ROC for 5 consecutive financial years, this is also most exceptional point, remember. And tribunal deems it just and equitable to wind up the LLP. So in these 5 cases, tribunal may order for winding up. And remaining points you can see, LLP versus partnership. Just give one time reading. We don't know. Such questions can also be tested. LLP versus limited liability company also. Just give one time reading. So yes, we are left with the 2 questions. Let's see these 2 questions. Astra Consultants LLP and Nova Advisories LLP are LLPs registered in India and engaged in professional advisory services. Due to financial stress and overlapping situations, the partners of both LLP proposed a scheme of amalgamation whereby Astra Consultants LLP would transfer its entire undertaking, assets and liabilities to Nova Advisors LLP. Okay, application was made to the tribunal seeking sanction of the compromise and arrangement. The tribunal, after following due process, sanctioned the scheme on 10th January 2025. Certain creditors argued that scheme was not being implemented properly. One partner claimed that arrangement had become unworkable due to unforeseen liabilities. Tribunal found that compromise could not be worked satisfactorily even with the modifications. If it can't be worked satisfactorily, then tribunal will pass an order for winding up. So LLPs failed to file the certified copy of tribunal order with ROC within 30 days. Based on the above facts, examine the legal position under LLP Act 2008. So what powers does tribunal have after sanctioning a compromise or arrangement? It can continuously monitor the implementation of compromise and may issue additional directions to modify the scheme. Whether tribunal can order for winding up if arrangement can't be worked satisfactorily? Yes. What provisions tribunal make in scheme of amalgamation of LLP? So transfer of all the assets of transfer LLP to the transferee LLP. And here dissolution without winding up and protection to descending persons is also within the powers of tribunal only. What is the effect of tribunal's order on transfer of assets and liabilities? Automatically, transfer LLP's assets and liabilities becomes assets and liabilities of transferee LLP automatically. No need of further registrations. What are the consequences of failure to file tribunal order with ROC? Non-filing of tribunal order with ROC, the order will not be effective. The order would not be valid, and penalty proceedings will also apply. Last question. Orion Infotech LLP was incorporated on 1st April 2018 with 3 partners and is engaged in IT support services. Due to internal disputes, 2 partners resigned on 30th September 2024, leaving only 1 partner. LLP continued its business without introducing partners till 30th April 25. So 6 months, not 6 months, 7 months over, LLP is doing business with only 1 partner. Further, Orion Infotech LLP failed to file its statement of accounts and solvency and annual returns for 5 consecutive financial years from 1920 to 23-24. 5 years non-filing of the returns. If this matter is conveyed to NCLT, NCLT on suo motu orders for winding up of LLP. In addition, serious allegations were raised by the creditors that LLP affairs were being conducted in a manner prejudicial to public interest, that continuation of LLP would be unfair to the creditors. One of the remaining partner argued that winding up is a drastic measure. LLP should be allowed to continue. So based on this, answer the following 4 questions. Whether Orion Infotech LLP can be wound up tribunal due to reduction in number of partners? Yes. Whether continuous non-filing of statutory returns is valid for winding up? Again, yes. Continuous 5 years. In examination they may ask you 3 years. Continuously 3 years non-filing of annual returns. Is it a punishable, is it a ground for compulsory winding up of the LLP? The answer is no. It's not 3 years, 5 years. For company 3 years, for company 3 years, whereas for LLP 5 years. Whether tribunal can order for winding up on just and equitable grounds? Yes, when there is a deadlock in the management. Partners are not agreeing to the terms. Partners are not doing business with a fiduciary relationship. Based on fair and reasonable grounds, tribunal may order for winding up of the LLP. What are the modes of winding up of an LLP under LLP Act 2008? You can see LLP can be wound up either voluntarily or by the order of the tribunal as provided under section 63 of the LLP Act 2008. So generally this kind of question won't come. This kind of question won't come. Just I made this, okay. So with this revision of marathon of LLP including exceptional topics is done, ma. So tomorrow we will meet with a new topic, that is FEMA. Exceptional questions of FEMA is very important and sensitive, because in examination from FEMA, if you see last 2 attempts, all sensitive points, exceptional points are being tested. So don't forget to attend tomorrow's session. Fine. So with this I conclude. So take care. Happy Sunday once again.